All right. So, good evening, everyone. Thanks for being here. I appreciate everyone being here tonight. Um, Tonight, I want to talk about a subject. This kind of came up. Um, Rick did a little evening class that was just for trial members to kind of familiarize them with terms and things like that. And there were a lot of questions that came up that made me, consider this class tonight because for those folks who are new or don't know, I do an awful lot of individual coaching with folks. And I got to tell you, there's some major mistakes out there that people make that hurt themselves in trading. And one of them is having the discipline to take profits. Um, we all want to make more money, right? We all want to make more money. We all want to reach out there and grab that golden ring. We all want to get rich quick. All right, that's in our nature. Um, if I wave $200 in front of Ed, he's going to ask me for five. It's just the nature of people. We always want more, right? He's got a tractor to pay for, and I can't. I'm not sure. Trading agent, trading Jen. I'm not sure if he recorded that. You'll have to ask Rick. And what we often do as traders is we kind of forget how important it is to take profits. Now, this is actually an old presentation. You guys can still hear me, right? Okay. Thanks, guys. So what we want to do. This is kind of an old presentation. I'm going to go through this quickly, but then I'm going to talk a little bit. I'm just going to look at some charts and talk about trade planning and why this is so important. And this is really for anybody out there. And I got to tell you guys, with just a few simple rules and a few guidelines, I have helped a lot of traders turn themselves from losing traders to winning traders. And one of the key elements is learning to take profits. Okay, so I'm going to run through a few slides here real quickly, and then we'll look at some charts. Some of you have seen this before, but the point is not the presentation. The point, or this presentation for tonight, but the point is kind of the idea around taking profits. And sometimes we get caught up in too many things. How many here would agree that in your trading, you are your own worst enemy? Yes, the market's volatile. Yes, COVID is a nasty thing. Yes, the presidential election thing that keeps dragging on and on is tremendous. But most of us are our own, I would say all of us are our own worst enemy when it comes to trading. We are the ones that put our emotion into the market, our emotion into the trade. And it comes pretty natural because we all love a home run, right? We all get all of those emails and all of that garbage that comes to us that would make you believe that trading is the easiest thing in the world, that everybody is making money in the market, and you've got to be the worst trader in the world if you're not making a gazillion bucks in the market flying around in a private jet, right? The thing is, guys, the way the market works, half the people have to lose for half the people to win. So at any one point in time, no more than half the people are making money in the market. Okay, does that suggest that everyone's out there hitting home runs and making all kinds of loot in the market? No. If we put some common sense into the way the market works, we know that's not how trading works. We're in competition with some of the best traders in the world when we step into that ring. of the market, and we are doing battle with them. And oftentimes traders come to that battle unprepared. They have no plan. They're allowing their emotions to dictate their trading. And how many people in here would be willing, just type in a Y, if you struggle with being a winning trader, and would probably put yourself in that realm that I win about half my trades, I lose about half my trades, right? That's where I was there for a long, long time, guys. I was there for a long, long time. And the reason is, one of the major reasons is I didn't have the discipline, and I was not willing to take profits. Okay. I don't know if my good buddy here, Mike Peterson, is here tonight. I worked with Mike as a coach for quite some time. Mike practiced trading for over a year before he went live. Mike runs a higher win-loss ratio than I do month after month, because he is the king of taking profits. Oh, see, I just made his head blow up. He swelled up, and now I'm going to have to buy him an ice cream. And he is the king of taking profits. He has no greed in him whatsoever. When he sees a profit, he takes it. Okay, and because of that, his win-loss ratio is very high. Okay, consistently high. He loses just like everyone else. Okay, but his consistency is really high because he's learned the idea that it's more important to be consistent in your trading than it is to be right. Okay. Trying to hit that home run, trying to be the smartest guy in the room, it's much more important to be consistent. And something Mike has posted a lot, it's easier to find 10 trades that make $100 than it is to find one trade that makes you $1,000. Would you guys agree with that? Is it all that hard to find a trade that can make you $100? The problem is when we find it, we don't take that $100 profit, right? We do some silly stuff. And this is something that in the 3-8 trap class, I talk about this stuff, and I talk about this actually quite a lot. If a group of us were walking down the street and a $100 bill blew in front of our feet, several of us would probably come away with a concussion. Okay, because we would all reach for that bill at the same time. But isn't it amazing in the market? We see a $100 profit and we're too proud to take it. Think about that. How many of you would agree that if you had taken some consistent profits like this, your account would be in a lot better shape than it is right now? Because we let those $100 bills pass by us. Let me ask you this question. Is there anybody here this week who has had a $100 profit and let it go bye-bye today? I know there's folks here that did that. And wouldn't it feel a whole lot better, guys? And more than 100, yeah. Wouldn't it have felt a whole lot better to just said, look, I had a winning trade, take the profit and walk away? Protect that capital? But isn't it true, when we see that money, we always want more, and greed gets in the way of our success? Okay, we've done our job. If we've created a trade and that trade has a profit in it, $100, $200, whatever it is that was in that profit, and we don't take it, we've created our own problem. We've stood in the way of our success. We did our job. We found a good quality trade. We entered the trade, but our failure is when we fail to take the profit, right? So think about that, and how many times you have let that money slip through your fingers, that you would never let it go away. As a matter of fact, you might even run out into traffic to grab that $100 bill if it's blowing fast enough into the street. You're not going to let that thing go away. But we do it every day in the market. We puff out our chest and say, I'm not here to trade for $100. And you don't have to focus on $100. Maybe it's 1,000. You've got a big enough account that the $1,000 is your number. Okay. Gwen, I think you know the answer to that. He's not a 100% winning trader. Nobody is. He has a target that he's trying to reach, a goal that he's trying to reach on his trades. When those goals are hit or achieved, he takes the profit. And he doesn't care what happens after that. He has losers. He has to cut those losers off. We cannot be a good, solid winning trader if we let our losers run. He has losers just like everyone else does. Okay? But he also manages himself in taking those profits. There's an old saying, do you eat like an elephant? How do you eat an elephant? I mean, you eat an elephant one bite at a time, right? The same thing is true with being successful in your trading. We have to take one bite at a time. We can't be swinging for the fence on every swing. We have to take those base hits from time to time, okay? And part of that requires you to think about what your goals are, okay? To me, it's kind of an interchangeable word for me. You'll hear Rick talk about, I don't do this whole target thing. But think about it. Goals and targets are kind of the same thing. We have a percentage, a dollar amount, whatever it is that we're shooting for so that we can reach some goals. Okay? So we can hit a weekly, a monthly, an annual goal that we're shooting for in our trading. Those are goals, and those set some targets in the chart. Okay, where we need to start thinking about taking some profits. Okay, because we can't be successful in trading. It's impossible to be successful in trading if we don't get comfortable with taking profits. Would you guys agree? How are we going to be consistently profitable traders? Let me ask this question. How many in here want to be consistently profitable traders? Okay, so how are we going to be consistently profitable traders if we don't take profits consistently? It's impossible. Okay, we can't get consistency in our trading unless we get comfortable with taking profits. I'll give you an example. I got into FCX. Okay, I got into FCX on Friday. I'm just going to put a mark here. FCX was here. I woke up Monday morning and FCX gapped up to here. Now that only accounted for an 11.5% gain. Okay? But guess what I did? If I get into a trade and the next day it gaps up, I'm immediately a winner. I close the trade. I take the profit. If you looked at the pullback on FCX this morning, you would have been glad that you'd have taken the profit too. I closed the trade. Can FCX go higher? Yeah, of course it can. I don't care. I put money in my account. Do you guys see the difference in that attitude? My job is to make money. not to make, not to be super right, not to be the super trader, not to be, time the perfect exit to drag every penny out of that trade. That's not my job. My job at the end of the day, at the end of the week, at the end of the month, at the end of the year is to make money. And I have no ego with the fact that I don't care if it's 11.5%, it's money. And I put it in my account. Gaps are gifts. And I do that. You can ask anybody in Right Way Options. I do that consistently. I get into a trade and that thing immediately gaps up. I'm gone. True that, Ed. Okay. My job was to find a winning trade. I did that. And I accept that success and I take the profit. Now my job is to look for the next trade and just do it again. Okay? That's how real consistency builds in an account. And if you ever want to be a full-time trader, you have to start getting comfortable with taking profits consistently. It's the only way you can do it. The only way you can get there. Take a look at this thing. I think all the math in here is right. Look that over. If you just, how many in here right now, if you took three $50 winning trades, this would be the best return you've seen in a year. $7,200 per year. How many in here right now would that double your account? Okay. Now think about this. If we just get comfortable with taking profits, comfortable working through the details of a trade plan so that we can take profits and then develop the discipline to take those profits. And I'm not telling you guys, you have to take a $50 or a $100. I don't know your account situation. I don't know your tolerance to risk. Okay? You have to figure that out. Every trader is different. But believe me, guys, if I can build a career doing this, and I'm going to pick on Mike just a little bit. Mike would tell you I'm not the sharpest guy in the room, okay? And I would repeat that about him. We're just a couple of good old boys in a little town in Nebraska. Okay, there's nothing particularly special about us, other than we have developed the discipline to take profits. Okay? If you want consistency in your trading, you have to learn to take profits consistently. All right? So let's think about this for a minute. I don't want to spend any more time with this. Let's take a look at some charts, okay? And let's talk about what a trade plan might look like. Now, I want everyone in here to think about this for a moment and think real closely, real carefully about what your rules are for trading. And honestly, some of you are going to say, I don't have any rules. I just fly by the seat of my pants. Okay? Let me tell you what happens with a trader like that. You're not here very long. You're not a member very long because you get frustrated and you quit. You give up on your dream because you're not willing to develop a set of rules. Think about that. Because we might get a little bit lazy and we just don't want to have the discipline to follow some rules, we give up our dream. We give up our potential success because we don't put together a simple plan. Okay? We need to think about how much tolerance to risk we have before we enter a trade. We need to know what that number is. Everyone in Right Way Options will tell you, if I look at a trade, it may be the perfect buy signal. It may be the most beautiful chart out there. But if the risk is too high, guess what I do? Guess what I will lay out a trade for anybody in Right Way Options. I will show them all kinds of different ways they might be able to trade it. But guess what I tell them? I'm not trading it. I don't care if Warren Buffett comes and knocks on my door and says, this is the trade you've got to have. If it doesn't fit my rules, it's not a trade for me. Okay? A lot of traders want to build confidence in their trading, right? Would you guys agree? You want to build confidence in your trading so that you know when this is the right trade or the wrong trade. But the problem is, so many of those folks aren't following any plans. They have no idea what kind of a trader they are yet. They're wandering around, just throwing money at the market, hoping something sticks. We have to know. Okay? So when I plan a trade, and the reason I'm showing you NIO is I took 2 trades in this. Okay, just recently I made 12 grand on this trade. Okay, that's not to brag about it. It's not even close to trying to brag about it. I want to show you what I did here. And everyone in Right Way Options had the opportunity to trade this trade. This was a called trade. First thing I do, if there is no trend, there is no trade, period. If there is no trend, there is no trade. Have you ever heard anyone ever say that they have gotten rich or built their career counter trend trading the market? I've heard a lot of people give it lip service. I have never ever seen a counter trend trader get rich. Trying to fight the direction of the market, trying to fight the direction of the chart. So if there's no trend, I don't trade it. Simple as that. Okay? And I stick to those rules. I don't take trades that have too much risk. I don't take trades that aren't moving with the direction of the market. Meaning I don't counter trend trade. Okay? I know what my tolerance for risk is. So I take very specific trades in the market that have low risk entries. Now, I still lose. Just like everybody else in the market, I still lose. I lose about 30% of my trades on average. Sometimes do a little bit better than that. Sometimes just do a tiny little bit worse. But I haven't been below about 67% win-loss ratio for years now. Because I'm very specific about what I do. I'm not here to practice. I'm not here to throw risk at the market. I'm here to trade my plan. This is a business for me. Okay, so let's think about this for a second. I made an entry into this trade. And as a matter of fact, let me just show you my drawings on here. Everyone in Right Way Options knew this. In fact, I laid out a bull put credit spread trade for folks that didn't want to take a directional long. That's what these 3 lines here are, is a bull put credit spread. And I placed an order to enter this trade on this day because it popped my alert. So we were getting close to that trend. We were holding tight to a support and the stock was trending. Now, everyone in here would probably agree this is a high risk trade. Okay, the implied volatility on NIO runs about 120%. Incredible volatility in this chart. Now I'm going to say something here. I'm an option trader. I'm going to say something that people will chastise me over and over again. When I made this trade, I wasn't going to pay the high implied volatility cost for the options. I bought the stock. because I have no theta decay buying the stock. I don't have to pay the high price of that high implied volatility. I just bought the stock. Okay. Now, I don't care if you go ahead and buy that option in the trade, but when you have really high implied volatility in those stocks, guys, you not only have to be right on direction, you have to be right on timing. When you have huge implied volatility, the theta decay is huge. You have to wait 2 weeks and you've lost money. Even if you're right on direction, you're probably lost money. So I won't do that. Okay? I can tell you I'm not the perfect chart reader, but everything for me is about the price action of the chart. Now, why would I pick this area right in here? Buyers and sellers were kind of in agreement, right? There was nothing here showing me a buy signal yet until it popped through my alert right there. That pink line was an alert. Buyers and sellers were kind of in agreement. And then it popped through, and what did it do? Just to show you that I'm not the perfect chart reader. It pulled back. I mean, like within a minute or two of me buying it, it pulled back. But it never broke the rules of my trade. Okay? I knew that if this stock closed down below this this price action support in here, I would be out of that trade. Guaranteed, because I put in a hard stop. I know Rick says he doesn't trade hard stops because he's here watching the market. I put in a hard stop. And I put in a hard stop because if I'm honest, I'm so busy during the day talking with people and doing things, I often don't even get a chance to look at my account. Okay? So I put in a stop. Then I don't have to worry about it anymore. Then I don't have to sit and watch a candle wiggling around in the chart. How many of you agree that you waste days, weeks, even months, or even years sitting and staring at a chart just wiggling around? Hanging on the edge of your seat for the next wiggle. Don't you guys think that's a waste of time? Yeah, it's awful. It's awful emotionally too, isn't it, Lee? It's taxing. It wears you out. So I don't do that. When I look at a trade, and I have a dollar amount that I'm willing to risk on the trade. If I plan that trade and that dollar amount exceeds what I'm willing to risk, I don't take the trade, and I don't care how perfect the chart looks. Okay, because here's what I know, guys. When I go back and look at my stats, it's not about how many trades I made. Isn't it funny? We come to the market and we just have to find a trade today. Hurry up, hurry up, hurry up and find a trade today. But I'm telling you, success isn't about how many trades you take. Success is about how many trades you win. Think about what your accounts would be like if you eliminated, if you're a 50-50 trader, if you just changed it a little bit, eliminated some of those repeated mistakes, and now you're a 60-40 trader. How much difference that would make in your accounts. See, it's not about how many trades you make. It's how many trades you win. So I'm picky about the trades I take. I'm in no hurry to throw money at the market. None whatsoever. Either the trade sets up for me or it doesn't. It's black and white. Ed has mentioned several times, I don't know if Ed's still listening, but Ed has mentioned several times when he places a trade, he kind of considers himself as the banker. And they're asking for his money. They're asking for a loan. And he's going to scrutinize every sheet of paper, make sure every I is dotted and T is crossed before he loans them their money, that money, his money. He's not playing games here. He doesn't take risk just to take risk, just because he needs the practice of taking risk. He's not addicted to taking risk. Okay? Jake, you're taking that $100 thing out of context. You don't trade my account. You don't know what my account size is. For me to make my goals, I have to make some significant money. I take the same trades that you could take to make $100. I just take larger trades. I do the same thing that I've done when I traded small to now I'm trading larger. I do the same thing. I just scaled up my trades. It's the same patterns. It's the same trades. It's the same thing I do. I just trade more contracts or more shares. It's the same percentages. Okay? So think about this for a second. I enter this trade. My stop loss is here. I set a hard stop in the market. Do I have to worry about this chart anymore? I really don't, right? I really don't have to sit and stare at it. I don't have to look at it every 10 seconds of the day. I don't have to look at my brokerage account and watch those numbers flickering back and forth, because that makes me nuts. I set a hard stop. I know what my risk is, and I know it's acceptable. Okay? What my minimum risk in a trade, Jake, is not important. What's your minimum risk? Let me ask you this question, right? If you're willing to play along, how much can you lose on a trade? How much can you lose on a trade and say, that's okay, I can go to sleep at night, I don't have to worry about it? Okay, so let's test that a second. $300. Jake, how many trades do you normally hold at a period of time? What's your maximum number of trades that you're willing to hold at any one time? So you got to know this stuff. You cannot have any kind of plan until you know your risk. Okay, so you're willing to hold about 10 trades. Have you ever had one of those days, Jake, when the market reverses and you lose on all your trades at once? So what you're saying to me is you're willing to lose $3,000 in a single day event on a big reversal day. Well, then you're pretty odd, because most everyone in here has had a day where everything that they're in stops out. Those big market changing events. Okay. So you're telling me you're willing to lose $3,000 all at once. Is that true? And it could be true. If your account size is large enough, it's true. Okay. So if you've got a tolerance for risk like that, then you've got to have a pretty good sized account. Okay? So if you're willing to lose $300, would it be fair to say that you'd want to target a certain percentage, maybe 15, 20%, in return in a trade to reach your target? How far are you willing to play this game, Jake? What's your account size and what's your goal for the year? What's your goal for the month and what's your goal for the week? I know mine. See, I plan to win. Okay, so you risk $300, you want to make $6. Okay, simple math here now, Jake. If you enter this trade, how far does this stock have to go? If you're going to put $300 risk and you're trying to make at least $600, how big a trade do you need, and where's your target? Where are you going to take profit? That's how you plan a trade. If you plan a trade that has $300 risk but has a big resistance above, and no chance of probably making you, well, I shouldn't say no chance, but unlikely chance of making you your target, you shouldn't take that trade. We're not here to trade just to be busy. We're here to trade to make money. We take high probability trades. Okay. So now you know, if I can risk $300 on this trade, if I can have enough trade size to make $600. Now let me ask you this question. How many times, Jake, have you made $600 in a trade and not taken the profit? As a matter of fact, not taking the profit until it's either a loss or you've lost a significant portion of that gain because you didn't have a rule to take the profit. You don't have the discipline to take the profit. That was me for a long, long time. I yo-yoed my account like this. Had great periods and huge losing periods. Great periods and huge losing periods because I never had a plan to win. I never had the discipline to take profits consistently. To only take trades that have high probability and to know the risk that I put into those trades before I enter them. Okay, so you asked me how I made 12 grand on this. I bought 1,000 shares of NIO here. I bought another 1,000 shares here. Took profits up in here someplace. I made 12 grand. Both of these trades are the two patterns that I trade almost all the time. When the stock is trending and consolidates over to trend and shows me a buy signal. Or when the stock is trending and we pull back to trend and support and I see a buy signal. In fact, there was no hesitation. If you ask people in Right Way Options, there was really not even any hesitation for me to take those trades because those are my trades. Okay? It's pretty simple. You follow a plan. Awesome, Moto. Congrats. Okay, you follow a plan. You follow a set of rules. By the way, when I entered this trade, guess where my stop loss moved up to? Everything that I had here and the addition that I added here, my stop loss moved up underneath here. I was not going to let this turn into a losing trade. I just added to the trade. Okay. Now, let's talk about something else here for a second when it comes to taking profits, and particularly on the option side of things. The two types of trades are a stock that's trending that consolidates over to trend, a nice tight consolidation over to trend. It's what I call a pop out of the box pattern. The second pattern I trade is what we call a pullback opportunity. Stock moves up, pulls back to trend, and it's even better if it pulls back to trend and it's reacting to a price support as well. Okay? It strengthens it if it's at reacting to support and trend at the same time. Those are my two trades. Almost every trade I make are those two trades. That's the trader I am. That's what I do. Okay, and it doesn't matter if I trade a weekly chart. Let me show you this. This is not a brag. I want to be really clear on this. I bought this trade as a weekly buy hold trade for a long-term position. Do you guys see anything different about this trade setup that I just talked about? Stock finishes its downtrend, starts an uptrend, moves up, consolidates over, finds buyers. That's where I entered the trade. Still holding that trade. Okay? But on my swing trades, unless you're holding long term and planning to hold long term, you need to be taking profits. And by the way, in this trade, I actually did take profits. This moved up way farther and faster than I expected it to. So I sold half the trade here. Took a profit. And then I bought it back over here and I added options to the trade here. Same pattern, right? Consolidate over to the trend. Same pattern. Over and over and over again. Same thing. A price action is price action. Whether you're trading weekly charts, daily charts, half-hour charts, 5-minute charts. When I trade futures, I trade a 333 tick chart and I trade the same patterns. I don't do anything else. Honestly, I don't do anything else. I trade those two patterns. Okay? And I'm picky about the ones that I take. I don't just take anything. I don't want lots of volatility. I don't want lots of wicks and tails. I want concise price action. I'm not here to find a trade every day because I need to find a trade. That's gambling. That's an addiction. That's not a business of trading, or not the business of trading. Okay? So when we take trades, we have to be focused on the trade setup. Not to just be rushing to take a trade. And we need to follow most people are going to feel much more comfortable if they sit within a set of rules, okay? You have to have a set of rules. I know what mine are. I know when the risk is too high for a trade, I don't take it. It can be the most beautiful setup I've ever seen. If the risk is too high, I don't take it. Ed, do you take a trade? No matter how beautiful it is, if Rick is calling this trade, telling you this is the best chart he's ever seen, if it doesn't fit you personally, do you take that trade? I know the answer to that, but you have to know who you are as a trader and trade your plan. Okay, this is what I do. Okay, now when it comes to my swing trades, let me ask you guys, in most swing trades today, how many of you feel pretty darn lucky if you can get the stock to move at one direction at least 2 days in a row? Right? Two hours in a row, that's right. So if we think the market is that volatile, why aren't we taking profits when we get those nice little gains in that short-term move? You ever thought about that? If we really believe the market is that volatile and we're still trading, why aren't we taking those quick profits? Greed. If you take a, well, here's the problem, Lee, that is true. The market volatility is extremely high. If you're trading a qualified account and you can't take that profit in the day on a trade, so that you don't be you're going to be labeled a pattern day trader on that situation. That is a problem, because what that's telling you is the market, for the kind of account you're trading and your tolerance to risk, would you say that the market is giving you less odds or more odds of being successful in trading right now than it, because of the volatility? Right. So in that situation, if you're not comfortable or can't take those profits because of the pattern day trader rule, what it might be telling you is that I need to be waiting or standing aside until this market settles down. Right? We have to recognize and be disciplined to the market condition as well. Okay. So it might be telling it, if you're not feeling comfortable being able to hold anything over one day, that's probably saying the market's so volatile right now, I don't feel comfortable at all. And I better stand aside until I wait and find those better trades, till the market calms down a little bit. Does that make sense? Okay. When we're out there fighting against the market and we're not recognizing that the change in the market, and we continue to try to trade with the same intensity when the market shifts, guys, that's when I really suffered big losses. I would have these periods where my account would just look great and I would just be on top of the world, and I would tell everybody, I had this big ego. I would tell everybody, man, I got this figured out. I know what I'm doing. You can't tell me nothing. I know what I'm doing. Look what I've done. And then that market condition would change, and this would occur. And unfortunately, I usually wouldn't stop here. I would come all the way down here. Okay, I would give back everything and then some more to the market. And what happens when this occurs? When this is constantly occurring to you, your confidence is always shaken, right? Your confidence is always tore up. And let me tell you what happens, because I've done it over and over and over. Let me tell you what happens when this occurs. Right about here, you're starting to think, man, I suck as a trader. Right about here, you're thinking, man, I'm going to have to tell my spouse about this here before too long. And it's killing you. And so you start thinking that I must be missing something. Maybe I need more education. And you fall prey to every single ad that comes out in your email and things like that, because you start to toss about, right? There must be some other way for me to get this money back. And unknowingly, what you end up doing is you're constantly changing your plan. You're constantly changing your strategy. You're fluctuating so much that there's almost no chance you're going to win in the market. Does that sound like anybody here that you've been through that before? Always changing up, always doing, instead of, about 10,000 times, yeah. Instead of just looking for the problems within your trading plan and fixing them. Do you guys know I can take most losing traders, if they're willing to change, and if we look at their losing trades and identify the mistakes that they continue to repeatedly make, and we eliminate those mistakes from their trading, they almost immediately become profitable traders. Do you guys ever think about that? If you could just reduce the number of losing trades by eliminating a mistake, you almost automatically improve your win-loss ratio and your results in trading. But isn't it funny? We don't want to look at those losing trades. We don't want to spend time with those because that means we have to look within and find the problems that we are doing here. We don't want to admit that, hey, no, this scan has to be the perfect. They told me this was it. If I just do this every time, I'm going to win. Guys, there's no such thing in the market like that. We have to really focus on the price action of the chart and read that chart and evaluate and decide whether this is a good business decision or not. I'm not here to trade just for the practice or to be busy. I'm here to trade to make money. That means I have to trade with discipline. There are days I don't trade. I don't even want to trade. Because I'm protecting my capital. How much good does it do if you push and push and push and just keep losing? It's harder to come back from that, right? And then we toss about. We change everything up instead of looking within and say, what are the problems that are creating this? The fastest way to get to profitable trading is figuring out the mistakes that you're repeating over and over and over. Quick story. I don't want to hold you guys here too long, but a quick story. I have still have a customer that I taught in private coaching the 3-8 trap. They just wanted that individual help and that hands-on kind of thing. Taught them the 3-8 trap. And they came back the next month for another coaching session, and they were frustrated. And they said, doggone it, I'm not doing so good here. I said, what's the problem? I said, well, my win-loss ratio is still about 50-50. I said, okay, let's look at the losing trades. You guys know that in the 3-8 trap, there's a trade that I call the crossover trade. When a stock, let me show you right here on Walmart. When a stock crosses over, 3 crosses over the 8, that's a crossover trade, okay, or a crossover move. That is not a trade signal to enter the 3-8 trap. The 3-8 trap requires not only the crossover, but the proof that it can hold above the 8. And then a buy signal, and then a buy signal. Every single one, now it doesn't happen like this all the time, but every single one of his losing trades that month, guys, every one of them was when he anticipated the move here and didn't wait for the pullback for entering the trade. I can tell you from my own stats, this trade here, when you chase the crossover, only wins about 50% of the time. I know that for a fact. It only wins about 50% of the time. How many of you want to keep trading a strategy that only wins half the time? Don't you want to be better than that? I do. Now, here's the other side of this trade. Okay, I'm going to pull this back where we find. Here's a crossover, and if I wait for the proof of support and wait for the buy signal, I know that these trades will win about 70% of the time. Do you guys understand why I do pop out of the box consolidation over to trend and pullbacks? Because they have a high winning ratio. That's why I do that. That's why I'm disciplined to that pattern. That's why I know what trade is mine and what's not a trade for me. I can tell you also right now that what I just showed you as a good 3-8 trap setup, I wouldn't have taken, because look at the volatility in that gap clear down here. If I entered that trade up here, look at the risk I had to take on this trade. This is a no-go trade for me. Won't take it. Okay? My trades are going to be those simple trades. The low-risk entry trades, what I showed you in NIO. I'm not going to take high risk trades. Look at this one right here. You see where my alert is here on these charts? Would you guys agree? These are relatively low risk entry trades. Now this alert was to get me aware of this chart. Notice that we were just kind of chopping in here. We just kind of held right in here. I actually didn't take that trade. Can you see that this trade has that low risk entry? It's about being picky about the trades that you take. Because even if you're really picky, some of those trades aren't going to work, right? 30% of them probably aren't going to work. That pink line right there, that's how I set most of my trades. I make my trades come to me. I don't chase a candlestick. I don't chase anything. I wait for the trades to come to me. I set alerts and wait for the trade. Okay. That way I can pretty much plan the trade ahead. I can look and find out if this stock has good options, if it's even worthy of me wasting any more time on it. I do that ahead of time. Yeah, that pink purple, I don't know how you see it on your screen, that pink or purple line. Everywhere you look on my charts, you're going to find those pink or purple lines, like this one right here. Because I was looking for the possible trade over here. Gave everybody notice of that this morning. Those are the kind of things that I look for in charts. FCX, if you can see right here, you can see my alerts. That big pink line, that was an alert. This up here, I didn't have an alert on it because I was watching this trade. I can see this pattern developing. I can plan the trade ahead of time. I can tell you whether or not it's a high risk trade or not a high risk trade prior to the trade happening because I planned the trade. So I'm picky about the trades I take, and that's one of the reasons I eliminate so many losers. I found out the stats. I found out that when I do certain things, I can only win such a percentage. But if I stay disciplined to my plan and follow my set of rules, I win at a higher percentage. Not that I win all the time. Okay? Not that I win all the time. I don't. Again, I want to repeat. About 30% of the trades I take lose. Take a look at this right here on FCX, Jake. Would you agree this is a nice tight consolidation and we're kind of sliding over here toward trend, right? That's one of the trade patterns I look for. So yes, I see this price action in here. I set this alert and I wait for this trade to trigger. I don't have to watch this incessantly. I don't have to do anything. I just let the computer notify me when this is popping up and triggering an alert. And then I make the decision, am I entering that trade or not? If the market is sinking hard that day, do you guys think I'm going to enter that trade that day? No. You got to think about this stuff, okay? You got to move with the market. And all of these charts, you'll see lines placed all over. Here's a short trade setup. There's my price alert. Okay, all over these charts, you'll see them. Where I've been looking, I don't even know why that one's, oh, that was an alert. I was looking for a long trade that never triggered. SCCO, price alert. Moving over to trend, I'm waiting for the trade. Same pattern. Same thing over and over and over again. Okay? So the point being, guys, there was a lot of talk the other night that really kind of inspired me to do this, but the idea that we have to have a set of rules and a set of guidelines. And if you're uncomfortable in your trading, the best thing you can do is get disciplined to your rules. And one of the things that's extremely important for you to be profitable is to start taking profits. Know what your goals are and start working for your goals. Like I was telling you, Mike trades the 3-8 trap. Okay, Mike Peterson trades the 3-8 trap. He consistently runs a win-loss ratio better than 80% of his trades. And the reason is when he sees 15, 20% profit in a trade on an option trade, he's gone. I'm out of here. And he just looks for the next trade. Now, some of you are like Jake might be saying, oh, come on. Please, come on. Well, let me tell you, Mike is consistently sweeping out of the market $6,000, $7,000 a month. Just taking $120, $130, $140, $95, $110. And he's constantly sweeping out $6,000 to $7,000 a month. Okay? You got to get comfortable with taking profits and then working on that consistency. Find those trades, make the trades, exit at a profit. That's a win. Doesn't it feel good, guys, when you finally take a profit and you put money in your account? Why is it that we find it so hard to do that more commonly, more often? Allow that good feeling to happen. Take those profits. Know where your goals are and start working for them. Because here's the thing, guys. I know you cannot reach an annual goal if you can't work to consistently hit weekly goals. You don't have to hit every weekly goal to make a monthly goal. But I know if you don't make enough of those monthly goals, you will not make your annual goal. Okay? You have to stay focused in your plan and trade your plan. How would I trade a graph like LI? Probably wouldn't. If I could have caught a trade down in here, maybe, where there was low risk. Maybe. I'm guessing because look at the volume in this thing. This is a heavily manipulated stock right now. Suddenly something is happened in here. Okay, and it's spiked up. But let's just talk about this for a second. Look at the price moves in here. Where would you set your stop if you even tried to put a trade on here? That's not going to fit too many people's risk tolerance. Just the last test of support back in here. If we bought this in here and just put our stop underneath that last test of support, it's almost 19%. That's on the stock. Can you imagine what it is on the option? You take a 19% loss on the stock, guess what your option loss is going to be? 50, 60, 70%? Who's taking that trade? Only those that want to gamble. Okay? You don't trade a trade that has too much risk, Jude. I've talked a lot about that tonight. You have to have discipline to know when the trade has too much risk for you to take. Take a look at Coke. I love trading Coke. Last year I made $25,000 trading just Coke. I told people today, this only has a 20% implied volatility. How many of you are willing to buy Coke right in here and take the risk all the way down to this support? Not me. I'm not going to do it. I'm not going to trade a high risk trade, even though I love the stock and I love to trade it. I'm only going to trade it when the trade sets up. Okay? NIO is a very high implied volatility trade. But look at the trade setup. I purchased the trade right here. A low risk entry. I purchased the trade right here. A low risk entry. Extremely high implied volatility stock, but I could still wait, have the discipline to wait for the low risk entry into the trade. No, I don't, Jake. If I'm going to go to a lower time frame chart, I'm going to trade the lower time frame chart, because here's what happens, and I know it happens to you too. When you switch between time frames, you come up with all kinds of contradictions, right? If the price action of the chart is very, very volatile and you go into an hourly chart because that's the only way you can set a stop loss that makes it palatable, well, then you're really trading the hourly chart. Because if you go back to the daily chart and try to trade the daily chart, you've probably just put yourself in a position to lose money. You're going to get stopped out. So no, I don't. If I go to any time frame chart, that's the chart I'm trading. So for example, on my long-term charts, I do not evaluate them, adjust my stops based on the daily chart. I don't do it. I trade the weekly chart. Okay. Now, I know there's a lot of talk about that. A lot of people talk like that's the greatest thing going. But honestly, guys, how effective have you found that? How many of you go to multiple time frames and end up finding nothing but contradiction? As a matter of fact, you just miss lots of trades because you're trying to get fancy. Pick a time frame and trade it. Okay? Pick a time frame and trade it. It depends on the condition of the market, JP. When the market is extremely bullish, not extremely volatile like it is right now, almost all of them are directional trades. I prefer to be just directional long calls, long puts. But when we're volatile like this, would you guys say we have less opportunity to win on just long calls and long puts because of the volatility? We can't even hold them overnight because of the big whipsaws overnight. So I change. I do more credit spreads. Okay. I'll do more credit spreads. I will do more protection type trades during high volatile times. That's why credit spreads really work, is in those high volatility times. Okay, to reduce my risk to the market of that high volatility. Okay. I don't know what you mean by out. How far out when I trade a weekly chart? JD, I use the same trade setup that I'm showing you here. I trade the 3/8 trap on a 333 tick, and it's whenever I feel the desire that I want to trade it. Usually it's around news events or something like that that's coming that I might trade it. But I don't like trading fast. I did it for 4 years, and I hated it. Because the thing I hate, what I just talked about, the reason I plan trades and to do the things I do is because I don't want to sit here staring at a chart. How many of you signed up to become a trader because you wanted to glue yourself to a chart all the time? That's not why I became a trader. I became a trader for the freedom. So I hated day trading. I absolutely hated it. So I rarely day trade. Okay? That's right, freedom. The William Wallace line. Freedom! Jake, what I'm going to ask you, I mean, you're asking a lot of pointed questions. Become a member of the rooms and ask these questions during the day. Okay, I can't cover every single strategy and how I trade them and why I trade them that way. We just closed out a trade on Baidu. Okay, bull put credit spread. I took 65% return on this trade. This was the short strike. This was the long strike. This was the cutoff if we were wrong. Trade moved away from us. It was a defensible trade. That's why we had a cutoff if we were wrong. We defended the trade. Okay, I laid out a bear call credit spread on here with the same setup: short strike, long strike, a cutoff point. It's defensible. I have a plan every time I place a trade. When implied volatility is high, I can get further away from price in a credit spread and take a higher probability winning trade, even with the higher volatility. Okay? So if you want to learn how to do that, stick around, come into RWO, be happy to, I talk about credit spreads all the time. How I trade them, why I trade them, the reason I set them up the way I set them up. When they are a good credit spread, when they are not a good credit spread. Okay? And we've traded a bunch of these lately. And I don't win on all of these either. Okay? But we do a pretty good job on them. Making money when the market's kind of crazy like this. But let me kind of take a guess here, Jake. You're not very patient in your trading. Credit spreads are probably not for you. You have to develop a level of patience for a credit spread. You've got to wait. Okay? You have to have a level of patience to successfully credit spread trade. Some people have the temperament to do that, some don't. If you're trying to figure out whether you do or not, then you need to understand and learn the strategy and find out, practice it, see if that fits you. Okay? A 333 tick. A tick chart, I trade the Dow E-mini futures, the YM. Okay, when I day trade, that's what I'm trading. There's I'm talking too fast. There are tax implications to day trading stocks, and particularly with options. When you day trade stocks with options and you're trading a cash account, every one of those trades have to be recorded in your taxes. You have to be able to pair every entry and exit for your taxes. I didn't know that the first time I did it, and then I had a 300-page tax return. I don't day trade stocks, period. I trade the Dow futures if I'm going to day trade, because at the end of the year with the Dow futures, you take the trade. I traded this many trades. Here was my P&L. My taxes are done. I don't have to pair every trade on a cash account. Okay? Now, a tick chart means and it's different for every futures chart. Okay, the Dow E-mini futures trades in $1 ticks. Okay, so every point, 29,300, 29,301 equals $5 on an E-mini futures account. That's a $5 move. Okay? Every trade that goes through the market creates a tick. A 333 tick means it doesn't have anything to do with time. Most people are trading time charts, 5-minute chart, 10-minute chart. A tick chart creates a new candle every 333 trades. It's based on the number of trades. Okay? Yeah, it doesn't have anything to do with volume. It's about the number of trades that are taken. In the market. And by the way, 333 tick is really, really fast. Particularly on news events, it's extremely fast. Okay. Sometimes I will flip over and I'll just trade E-mini futures in front of everybody in Right Way Options just to show them what it's all about. And most people look at it and go, that's not for me. Because it's a high risk game. It's really high risk and it's very quick. I've shown, during volatile time, I traded E-mini futures in front of everybody that week. And the entire week, I only lost one trade. Because I was really picky about the trades. I took the patterns that I take and I take profits. Buy a trade, stock is moving down. Buy a trade right down here. I've already got an exit to close the trade. Stock, the futures move down, boom, triggers me out. I'm out of the trade. That's a winning trade. Not a gamble. It's a winning trade. I bank the money. That's the discipline. Okay. TD Ameritrade, all you got to do is, do you use Thinkorswim? All you got to do is set it up. Go over to Active Trader. That's where I trade it. This is the Dow E-mini futures, the December contracts. They're trading right now. They trade all night long. Okay, you can see the price is ticking here. And this is a 333 tick chart. Nope, I'm sorry, I'm lied. I switched this over to a 15 to show people. Time frame, tick, there's my 333. This is a 333 tick chart right here. And you can see the countdown. 208 trades have occurred. When this hits 333, there will be a new candle. Okay? That's the Dow E-mini futures. All right? So, everyone, I want to say thanks for being here tonight, and I hope you got something out of this. I really do want to help you be better traders. And it's important to me that you understand that there is a process to follow if you want to be successful in trading. And that is we have to get a plan. We have to understand what it is, who we are as a trader. We have to understand our risk. We have to understand what our goals are and start reaching out for those goals. We're not here to just trade to be busy. We're here to make money. And that means we have to start getting comfortable with taking profits. Okay? We have to start getting comfortable with taking profits. All right. Thanks, guys, for being here. I really appreciate it. And feel free, feel free. I mean, you can be members of both rooms. Rick and I trade a little bit differently. Rick pretty much does, well, not pretty much. He trades directional long calls and long puts. And there's nothing wrong with that. That's what Mike does. Mike Peterson just trades directional long calls and long puts. And as a matter of fact, he called the broker and said, remove all of my margin. I don't want to get hit for any pattern day trading rules. Remove all of my margin. It's a cash account, so he can trade as many trades as he wants to trade and doesn't hit a pattern day trader rule, because all he does is trade long calls and long puts. And that's okay. He knows the kind of trader he is. Okay. We all have to figure that out and figure out that path. Okay. In Right Way Options, we do long calls and long puts, but we also throw in credit spreads, and we do calendar spreads, and we do butterflies, and we do ratio spreads. I've even got right now a synthetic combo, a synthetic put on. So I can teach you just about any strategy and a set of rules around that to help you be successful if you want to be that kind of a trader, but you don't have to be that kind of trader. Okay? You never have to know. You never have to be a spread trader to be successful. You can pick your strategy, just get really good at it. Okay? So join us. And you'll see, we do make a difference. Okay? Everyone, take care. Have a great evening. Thanks for being here. I truly, truly appreciate it. I want to wish you all the very, very best. And we'll talk to you all bright and early tomorrow morning for the morning market prep video. All right? Thanks, guys. I really appreciate it. Thank you very much. Talk to you soon.